Welcome to 28th of July, last day of the week. Not the last day of the month, however, we've got Monday next week. And this today actually provided a lot of healthy moves that we took advantage of. And we're going to go through them quickly today. So we can see the Bank of Japan interest rate decision came out as expected. So this caused a lot of wicks at the time due to some of the comments Governor Ueda was making. And we can see this on the chart in a second. What I want to emphasize is there were plenty of other opportunities after Asian session, and I'm going to show you how we took advantage of that. We had inflation rates for different EU countries that provide a very small or minimal impact on the pairs we trade. The main, in my opinion, piece of data that caused a bit more impact was obviously the personal spending, personal income, and core PCE and price index. I completely overlooked this Michigan consumer sentiment final and forgot that this was coming out. Mistake on my behalf, but I didn't really lose anything because of it. So let's have a look at the trades today. So it was a healthy day in terms of trades, as I mentioned. And I believe I had 3 trade ideas, but we took 6 trades. So we took roughly 2 trades per idea. I'm going to go through them quickly. So GJ, let's start with GJ. We saw, like I said, this big wicks during 4 o'clock after all the comments are coming out, and it pushed all the way down to better buy area. And you can see since then we've pushed all the way up from, let's just say 176 400ish, all the way up to 188 800, right? That's 440 pips in a day. And how could you have taken advantage of that? Well, if you weren't awake or didn't catch this move around 8 o'clock London Open, there were plenty of moves from New York onwards. So I had alerts and I had a buy stop above this area, which is 179 flat. I got stopped in, but actually took a loss. It was an aggressive buy stop. I understood it was risky. What needed to happen after London was a slight pullback. Why? To gain more orders, to gain liquidity. Sorry, provide better buy areas again, and we can see that at 178,500 where price reacted to push price even further and retest the higher high it just created. You can see a beautiful bullish market structure being forming here as well. So after that, we saw another entry from myself. We're going to hop down to the 1 minute because we can clearly see it's bullish on the 15. You can see that first entry here it was a buy stop, wasn't on the charts at 9 o'clock. And then I got my alert triggered at 179. I said I wanted to see when this was in. So I entered another, not a buy stop this time, but an entry once price broke above the highs. When we have high volume times, or I can see price have in a high volume, as in larger candles, especially on the lower time frames, the moves usually happen quite quickly, meaning retests only happen once, rather than when we look for double top, double bottoms, even triple tops, triple bottoms. Sometimes, and a lot of time in these high volume sessions or high volume times, we get single taps. And that's where you need to be careful. Where even impulsive moves work a lot better and more efficiently. So this was risky. I entered here. Once it broke the high, we reacted to 179,200 just before NY open, and we actually pulled back to a better buy area again at 178,800. I didn't take advantage of that, unfortunately, so I actually got stopped out on this one as well. However, the move completely went all the way to my TP as well at 179,800, which is formed or found on the 1 hour and 4 hour time frames. So how could I have taken advantage a bit better of these moves? I mean, impulsively, great entry, yet we need to understand it can still react at these key levels that we have on the charts. We saw that pullback down to the better buy area. Once this happened, you could have looked for better buys again or even entered at this area. I didn't look at the charts until a bit after this time as I was a bit busy, unfortunately. So once again, we can see a nice break and retest now, and this is what I'm talking about with a single tap. So you got the break of 179,200. It's a retest and continuation, and that continuation was very, very harsh with New York Open. 60 pip continuation with just a one singular tap. And these are the moves that I'm talking about catching. Same again at 179,500. Single tap, another 60 pips. So 120 pips you could have caught in 27 minutes, 26 minutes. And that's very unusual. And to take advantage of that, you've got to be quick on the ball. So unfortunately, I wasn't at the charts these times. The last trade I took on GJ was during NY. So this was the same trade idea, these two. The last trade idea was a break of 180, 200, similar ideas, as in we're expecting one tap. So we've got the rejections, didn't quite tap 180, 200, which I was expecting. So I entered once we broke the highs here. And then continuation, we didn't get it, so I just closed. Once I saw that price was slowing down, closed. Great management and reduced the losses. And you can see we just bounced around really since then. So all the price exhaustion, we can see price exhaustion since around, I want to say, the 2 o'clock candle, so the 4 hour closing. But you could have taken a lot of moves between 12 and 2 o'clock, 150 pips roughly worth of moves. Hop over to gold. We actually took 4 trades in this, apologies. So we actually took 7 in total rather than 6. You can see these trades, 2 trade ideas on gold. Both of them are, sorry, this was just before NY open. What happened was, I saw on the 1 hour, I wrote out before that if we get a break above 1953, I want to look for buys, and if we get a break below 1945, look for sells, depending on data. Data came out mixed. If we look at the PCE, personal income, personal spending, all very mixed. Within consensus of forecast, nothing extremely positive or extremely negative. And I was waiting to see what held more impact, and you can clearly see what held more impact. The buys, cleaner candles to the left, so it all made sense. You can see gold continuing pushing up, which is unfortunate because I'm actually out of all my trades, and I'm actually expecting to see gold tap 1965 before the end of the day. So hop on down to the 1 minute. How can we take advantage of this? Well, great question. We had reaction, a break of 1953 around 11:30, and my alarms obviously got triggered. I wasn't on the charts, but I checked them after this time. Then we got the reaction, the rejection here, and that's where I was like, right, that's a perfect entry. So I entered just here perfectly in 1953, and then I was looking for more continuations. You can see just before this 1953 entry, I actually got a preemptive entry because I didn't want to miss the move in case we reacted, at this previous 1 minute resistance, and also just these 1 minute candles here creating wicks from them. So stop loss very safe below these consolidation or range candles, order block forming on the 1 minute here. About, I want to say 15 pips there and 12 pips there, stop loss wise. We can confirm that with this. Yep. And then we had obviously our target at 1965, looking to hold it long. We actually closed the trade because I had to leave the chart, so I closed the trades in profit. I believe we were in profit by about 30 pips with each, 40 pips with both trades combined, so that'll be 70-ish pips. Nice trades to close. Happy with that. And also the candle closed bearish, rejecting somewhere, and I couldn't manage it going forward, so I'm happy I closed profits because you can see the price actually would have hit my SL if I didn't close that. Then looked for the same trade idea, 2 more trades. First one was a loss, and I entered quite aggressively once it broke these highs. You can tell price got a lot messier towards the end, and this was a forced entry I don't think I should have taken. And then there's last entry here, you can clearly see a nice double bottom. I was like, right, I'm not going to miss this one. Enter with the double bottom. And then once we got data that I forgot about, that I mentioned at the start of the video, the Michigan report, consumer sentiment report come out. You can see the volume in candles increase a bit. And then we've had a continuation up once the data has been digested into the markets. But overall, positive day. I'm happy with this. In terms of management, there was entries are actually one worse towards today. My management was a lot better, and I'm happy I noticed that we're in a higher volume today due to different various data events coming out. And so I took advantage where I could of those moves and overall capitalized and protected my capital as well. So going into next week, we obviously have on Monday more data, and you can see just Italian data, European area or Eurozone data as well. Inflation rate, that will cause some movement in the markets, also inflation rate for Italy as well. So keep your eyes out on for that, and Chicago PMI in the afternoon for USA. Mortgage lending won't cause too much movement in price on pound. Overall, like I said, positive day. You can see the pot market terminals here as well. Ended at 300 profit. It's not bad. You can see there's 7 trades I've taken here. 2 main losses, big losses. Then we've got the break-even-ish loss again, full loss, and then roughly a 2R and 3R trades there. So happy with that. And going into next week, we're going to take a nice weekend to chill and then focus up for the Monday, like I said.